Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show, Mark.
Glad to be back.
Mark, you still have that special offer for our listeners.
We do. We have a special offer. It is changed a little bit. It's 2021 quarter off, not half off. We're not offering the half off. It's quarter off. So it's 2021 quarter, QUARTER off, and you get 25% off of any of our subscriptions when you go to VRTrader.com. That's 2021 quarter off.
Is the shine coming off the high-tech stocks?
Well, that's been the case for a while, Jim. I mean, I guess the classic name I guess we could use is Tesla, which topped out recently. I'll give you the exact date when it did. It was when it blew off to about $900 a share. That was on January 25th, and it's been in a downtrend since. It was added to the S&P prior to that, and a lot of emotion as well as greed got involved in driving the stock up there. But looking across the whole spectrum of stocks, you have a whole group of high-tech names that have topped out. So that's just one good example.
Are we in a minor correction here, or could this be the start of something bigger on the stock markets?
Yeah, it could always be the start of something bigger. I can't really tell you that. Looking at the charts, it just looked like we needed the pullback, and I've been bearish for the year because of the January barometer. But for now, this February to March period, we have the vernal equinox. We got the Ides of March. Normally there's some type of volatility this time of year. A good example, of course, was last March, where we had the big crash tied to the COVID fiasco. So here we are in March again with a little bit of a correction. Whether this will accelerate into something more significant, it's tough to say. That could be an outlier event. So we're just taking it a day at a time here. But my overall perspective is negative for 2021.
Does that mean you're very conservative in what you look at?
That or short the market. We're playing it very close to the vest because of the modeling that we're doing and just the exuberance that we saw and irrationality in the markets in the last several months. But we'll take it a day at a time. If things change, we'll change. And we're trading, intraday today for our clients. We did several trades and made some nice money, a couple of small losers, but we're always looking for opportunity, and I suspect there's probably some coming up with this current correction, setting up some trading entry points. But whether those points will set the stage for a push all the way back to new highs, it's way too early to tell, but I'm inclined not to think so. And we're also seeing uptick in interest rates, which spooked the market. You always knew something was going to do something to change the market. So here we are, with this story, but there could be others as well. We got so much going on here, in the political spectrum. Donald Trump warned that if the Democrats succeeded in winning the election, of course we know they did so in a fraudulent way, but that's my opinion. Trump predicted the stock market would crash, and it ultimately might this year. Maybe not necessarily straight down like we saw last March, but it could unfold. And I'm sort of sympathetic to that scenario. More pressure to the downside, and we just a lot of nutty things up there. You know, we got a president who, an alleged president who's documented with some developing dementia, and we got a vice president here in the U.S. that's got a questionable background. We got, really, the list is really long here, and otherwise I'm going to get myself in trouble naming names and getting to accusations, but we're borrowing all of our money now from China. There's hundreds of thousands of immigrants coming in looking for jobs, and then Social Security benefits here that they're not entitled to. Look at the Keystone Pipeline disaster from, Canada, U.S., mismanagement, political misjudgments, overzealousness in the market, overpriced stocks. I mean, there's a lot of reasons why, we could have some problems, Jim. So, I like to think the market always climbs the wall of worry, and it overcomes stuff, and I think on a big picture basis that's the case, but I don't know. I'd be careful this year.
With so much money being shoveled out of government doors in every direction, what kind of an effect does that have on the markets?
It's got to have some effect on the market. I guess you're referring to like real estate, for example.
Well, we have real estate, luxury car sales, things that cost a lot of money, real things.
Well, I don't know if that's going to change how people are going to invest in the market or not. I think, real estate has been a diversion for a while because people were looking for diversification. They want to move out of the big cities because of social unrest. The low interest rate environment made that more amenable. There's been a big push, as you know, into hard assets, base metals, for example, and real estate, commodities, agricultural commodities. So, a lot of other places to put your money, but even those markets became extended. And look what happened to gold and silver. In my newsletter last year, I was writing, could 2020 be the high in the metals? And this was based on a study an old friend of mine did. His name was Terry Laundrie, over 20 years ago, talking about a big high at 2020 in gold. And so the rules are broken, and you got to follow what the market is speaking and what it's saying to you. And what it was saying was a lot of divergences, a lot of overpriced, equities, too much enthusiasm. Of course, there are sectors that still are tradable. I'm not giving up on the market here by any stretch, but even the ones that were popular, like the electric vehicle stocks, and I guess we talked about Tesla already, but there's a whole list of those, the lithium stocks, palladium, the infrastructure stocks, all these things had nice plays. Copper, we mentioned earlier, steel, aluminum, a lot of these things had good reason to go up, but have they gone too far, and are they in need of a correction for a while? And that's really the big question. Look at oil. Oil's really taken off. We were positive on oil. Most analysts were not positive on it, but look how far it's gone. Is that due for some type of correction here? It just seems to keep going. So, a lot of other places for money, I suppose. You're right, but whether that's going to change the stock market's bearish pattern or encourage it, because obviously some of these components are part of the stock market, is to be seen. So we got to really focus on each of the sectors and each of the individual plays, Jim. That's really where you're going to make your money, unless you just want to put it in the S&P and the Dow Industrials or the TSX and just sit back and say I'm a long-term investor and the storm will pass and ultimately we'll be back at new highs, which is also a philosophy as well. So a lot of dumb money, I hate to use that expression, but a lot of dumb money, just sits in the market forever and has done very well, so maybe they're not so dumb.
We'll have more with Mark Leibovit right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mark Leibovit. Mark, have the hedge funds backed away from shorting after the Reddit experience with GameStop?
There's no way I would know that, Jim. You got to look at each of the funds. My gut feeling is they have their own disciplines, and part of their discipline is to short what they perceive to be overvalued stocks. They're going to continue to do it. So I don't think Reddit and Robinhood and all that, that variable is going to change their methodology. I'm sure those who got burnt or those who were pushed out of business, if there were some, will be less likely to be doing it, obviously. But there's 1,000 ways to make money in this business. There is no one way, and I've learned that over the years. So everybody's got their own little discipline, their own little niche, and I would assume those that like to do what you just described will continue to do it.
As you say, 1,000 ways to make money is the big mistake so many people make is, well, I'm just going to invest in one or two things because I believe they have nowhere to go but up.
Well, this is the dumb money comment I made a few moments ago. I mean, those who've just sat with the market for the past, what you can say 1 or 2 years or last 40 years have seen, incredible gains. A lot of volatility along the way, and obviously they had to either just be very dumb and not pay attention to the market or don't care, or they're just so disciplined that they're just willing just to sit with the big picture until they need the money for retirement or for special purchases. You can't take that away from them. So that's just one of the 1,000. We got 999 more ways you can make money in the market besides just buying and holding. So it's as long as you're doing something right and making money, I guess you got to stick with it.
We'll have more with Mark Leibovit right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. What's your take on the U.S. dollar this week?
Oh, boy. It's been frustrating because I've been looking for the last couple months for, a rally in the darn thing because it's so oversold, and it did move finally. And I don't know if this is a big push or not. We have a little, what they call an inverse head and shoulders pattern, looking at the technical chart. And it sort of broke out of that on volume in trading today, which obviously didn't help the commodities or gold and silver. So, but we've had a couple false starts before now, so I don't want to hold my breath, but the chart says it should push higher. So I would say bullish short term, and unless it reverses this pattern and takes out the recent lows. So I'd be positive on it, as I am with the inverse plays for the interest rates. We're long an inverse ETF, expecting higher interest rates. So I guess that some would argue that goes hand in hand with the dollar getting stronger. So we'll see what happens, but that's what the charts say now.
I was going to ask about interest rates with U.S. 30-year mortgages rising just above 3%. Is that going to be a long-term trend?
That's a good question, Jim. What's long-term?
30 years, I would think.
I don't know. When the Dow dropped from 30,000 to 18,000 last March, April, then comes all the way back up again. So those type of moves you would expect over a period of years, yet everything seems to be accelerated. So I don't know what's long term anymore with the kind of volatility we've seen, but the trend's up for now. It might be temporary for a few weeks or months and reverse. So we'll just have to follow the short term trend and see if that becomes a a longer-term one. There are those that claim that after, I hope I get my numbers right, roughly 40 years of declining interest rates, we're finally due for a sea change in the interest rate scenario, that finally, with bonds dropping these multi-decades, we're finally going to see a reversal where interest rates in the years to come are going to go higher and higher and stay higher. We've heard this story many, many times in the last 20, 25 years that that's it. Rates are going up, and yet they kept coming down and eventually going to zero. Is this the time that is ultimately going to be that great sea change where we're going to change a 30, 40-year pattern? I can't tell you. Right now it looks a little higher, and we'll know 30 years from now.
Would higher rates be good for pension funds, insurance companies, and their customers, and the banks?
Absolutely. They make their money selling, buying bonds, and their portfolio is based on mostly the bond market. So higher rates are going to be, There's also a whole story out there too, how the Fed needed to get rates higher, and we heard this for years, but it didn't really happen, to protect the pension funds, which were in big trouble and being able to generate, the base income, and that was sort of required of them to keep their funds alive. And I don't know how they've managed all this time with rates being so low. Many sell call premiums on stocks and so forth to generate income, but for the most part, yes. Higher rates would be better for the institutional players, and could salvage some of the pension and retirement funds, which are in dire trouble.
Is the U.S. government going to legalize marijuana, and would that be a big boom for the industry?
Well, I think we're headed that way. I mean, it's already sort of legal anyway in a good part of the states by officially legalizing it nationally. I know the stocks have already told you the story, the ones that are benefiting in the U.S. I don't think it'll make much difference. The companies that are benefiting from the states that they're operating in legally seem to be doing well. They'll just open a few more states, I suppose. I think it's already, I guess what I'm trying to say to you, I think it's already built into the market. The market's pretty much discounted this. We saw a big run in a lot of the both Canadian and U.S. stocks. Mostly the U.S. stocks did better because they were better managed and better run, and they were capitalizing and actually making some money where the Canadian names were not, even though there was a lot of hype about it in the year or two prior. But I think it's already built in, Jim. I don't see the legalization changing what is already being accepted in the pricing of these stocks.
Mark, anything else we should be keeping an eye on right now?
Let's watch this seasonal pattern that's in front of us. This February-March period, see we come out of it. There's the old adage, sell May, go away. So does that mean if we do get some type of bottom here around the vernal equinox or on March 20, 21st, Ides of March, this whole time frame, does that mean we rally into April, May, and then we turn down again into the fall, or is that pattern going to be changed? These are the kind of key change points in time that I look for. I think we will be down for the year when all is said and done, but it'll be interesting to see if we get some type of trade out of here to the upside before we go lower, and that's sort of where I'm at. And if we break out to new highs, then hopefully I'll be participating somewhere along the way here and lick my wounds if I'm not doing well. But we've been doing pretty well playing the inverse ETFs. We actually had a trade today where we rang the register, so to speak, on some of the inverse index plays, the ETFs that we were trading. We actually did it twice in the last couple of days. So I don't think I'm going to get caught with my pants down. In other words, I'm not going to get caught here. Market's going to go straight up, and I'm not going to make money or participate or realize that I'm wrong. It's just that the people want you to make long-term forecasts. I don't think as a technician you really can, even as a cyclic analyst you can. You try, and we've been lucky in making a lot of these calls, but you got to sort of flow with what's happening. So if it changes, I'll change. That's really the best answer I can give you.
Mark, can you again maybe remind our listeners about the special offer? Yeah,
sure. It's at vrtrader.com. It's 2021 quarter off, 2021 QUARTER off OFF. And when you go to any of the newsletters, there's a little space for a promo code, and you put that in there, and you get 25% off any of our subscriptions. And again, thank you for mentioning it.
Mark, thank you for being on the show.
Take care.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was speaking to us from Arizona. If you have any questions for Mark or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.